Another suggestion is that when previously hot funds lag, that's not necessarily the best time to switch into the next suggestion of red hot or the ones that are actually red hot winners at the time. Okay, you probably want to stay with your investment. And something very important is during times like market declines, like for example, 1987 comes to mind. But then there's 1990, there's 1998, 2001, which was the tech correction, and of course just recently 2008, which was a major bottom. Okay, and those are all major bottoms in the last 20 years, when mutual funds went into massive net liquidation. Okay, typically that is not the time to be selling, and not the time to be loading up on whatever represents the new era that's coming around the corner. So I would end off by saying that beating the market it's not a financial goal, and it's not a financial plan. An income that a client does not outlive in retirement, that's a financial goal. And outperformance is not a financial goal, nor is it a plan for achieving an income that one doesn't outlive.
Wow, again, thanks for the information, Byron. I'm sure myself and the listeners are learning a lot about this process. Now, before we close out today, do you have any final thoughts or story you'd like to share with the listeners?
Well, it's interesting you ask that, because I remember how this was really brought home to me, and I'd say it was actually 5 or 6 years ago. And typically, when you do your investment reviews to see how people are doing, I had forgotten about a group of people, or I had a group of people that had done very, very well, and I was thinking, geez, what do these people have in common? And I started looking at some of the names, and then I realized that, I do have a few people that have been with me, for 25 years, and I had a group of them that had really, really outperformed, and actually their accounts had grown an awful lot. And I thought, and I had to think about that, to think what was different about what they did. And these were people, and I won't say that they were indifferent, but they were happy to find someone that they trusted and leave the decisions up to me, and they just went on with their daily, chores and what have you, and they just trusted me to contact them, and make changes when it was the right time to do it. And because they weren't bothering you, even in our business, it's very, very hard to have people sit there and want to do something all the time. And even though we will believe in certain things, certain principles, that if you do this, you're going to end up, with better results, it's very, very hard when people are at you all the time, and sometimes against your better judgments, you end up making changes to make people happy. But I realized that this group of people, they just would never call. They would only want to get in touch with me when I had something to talk to them. So I ended up only making changes when they really, really were necessary. And as a result, I realized, man, I really was surprised at how well they had done over large periods of time. So that really, really brought that home to me about how effective that is, and it sort of motivated me to be a lot stronger, certainly going forward in my dealings with people. When we're discussing what should be changed and what shouldn't be changed, and what course we're on, and should we be keeping to that course.
Man, Byron, thanks so much for the information for myself and for the listeners, but we're out of time. So if you need to reach Byron, you can do that at www.byronstriloff.com. That's www.byronstriloff.com. And of course, you can always reach Byron by telephone at 604-535-3700. That's 604-535-3700. Byron, once again, for myself and the listeners, thanks so much for being here with us today.
Thank you.
Thanks for listening to Sound Investing with Byron Striloff. To schedule a face-to-face conversation, you can reach Byron at 604-535-3700. That's 604-535-3700. And online at www.byronstriloff.com.
You're opted in to localwebradio.fm. Community-minded, locally focused.